Good morning, everyone. Today, I wanted to give a video about the differences in external audit, internal audit, and forensic audit. A few people asked me to put that. I was an internal auditor in South Africa for a few years, and also did external audit and couple of big forensic audits. I was working in the biggest auditing firm, tax accounting firm, which was a combination of a lot of directors, old directors from Pricewaterhouse, Coopers, PwC, Deloitte, KPMG, all the big directors from all the big auditing firms joined and started a big firm where I worked. External audit is basically a statutory audit where you check financial records, financial instruments like a profit and loss account, trading account, income expenditure account, and balance sheet. And it is an independent audit done, and objectivity is very important for all audits. No bias involved, and it is reported independently as well, and it is to check if the financial reporting is fair and accurate, and there are also stock takes taken, and eventually audit report is submitted, and it is very important for the investors and stakeholders of the company, and it obviously gives a lot of credibility to a company where audits are done, the trust element. So there's a lot of things involved, physical checks, like even in stock takes, and eventually you check if there are any differences from what they have reported, and if there are any differences, and eventually a report is given. So basically, external audit is a very historic audit because you are checking the financial record instruments of a company for what happened in the previous year. So it is done after that. Internal audit is actually a very proactive kind of audit, which I enjoyed because you add a lot of value to the company, the firm, and you improve the control systems, operations of that company. And risk management is a big factor, and internal controls. I first did the internal audit for Pumalanga Agriculture Development Corporation, MADC, which eventually merged with two other big companies and became the Mega, which was the Pumalanga Economic Growth Agency. And internal audit, you check the operations of the company, and risk management is so you add a lot of value and you check if the systems are correct, and whatever mistakes there are or errors, you suggest areas where the company can improve. And normally the report is submitted to a to the board of directors or to an audit committee. Obviously objectivity is very important in any audit, especially internal audit. It is an independent assessment. Also IT audits we have done. And there are a lot of audits like plant audits, environmental audits, which I haven't done, but there are many different types of audits. And forensic audit is a fraud investigation. I mean, it is a criminal investigation. And the first forensic audit that I did was at a huge municipality in South Africa, where there were a lot of riots and people were burning tires outside the municipality. And there were a lot of allegations against the municipal manager, the municipality. And we did the forensic audit for a couple of months or so, and eventually the municipal manager was fired, and the municipality also went under administration. And then we did a big forensic audit at an FET college, 14 of them. And we started with 5 allegations, and it ended with 14 allegations. So forensic audit is when there are certain allegations of fraud, bribery, a lot of money fraud, violations inside a company, and you are given a set of allegations and you have to investigate that. That audit where we started with 5 allegations ended with 14 allegations, and there's a lot of legal implications for a forensic audit because it eventually will be a court case as well. And even the CEO of the FET was fired after our audit. So there's a lot of legal implications for forensic audit. So that is the big difference between external audit or internal audit and forensic audit. External audit is basically a historic audit of the financial records, reporting of company balance sheet, all of them, and financial records are checked, and any changes are recorded and reported. And internal audit adds value to a firm, helps with the internal controls, improve internal control and risk management as well. And report is submitted, and eventually a follow-up audit is also done to see if the suggestions that have been made have been implemented by the company. So it's a very proactive thing, internal audit. And forensic audit obviously is a fraud investigation, a criminal kind of audit where there are a lot of allegations against a company for fraud, bribery, etc. And it is checked and reported, which has legal implications. I hope this has cleared basic differences about the auditing and gives more clarity. Thank you everyone for supporting me. I hope this video gives a lot of information. Thank you for supporting me. Please continue to support me. Take care. God bless you.